So let me ask you, Troy, when you were back testing, what kind of stuff were you collecting? What did you find useful?
Basically, at first, nothing until I started actually trading. And once I started trading, I found out some of the things that I like that I thought that I would need that I didn't. I had this real crazy, huge trading plan, and I just chopped it in half. And then I went back through back testing, which I still do every day anyway. And basically, for me, it's just I caught on to the behavior at the right time and the pattern, but the behavior creates the pattern. So I don't really focus too much on the pattern. It's just the behavior.
Right, right.
And the behavior, I mean, once you like get familiar with it, you can look for that behavior, different behaviors on basically any pair. I watch 10 pairs.
Okay.
Yep.
So you expanded it now.
Yeah, but I watch 10, but I find my ideal setups at least minimum 3 times a week. And that happens either on pound AUD, pound NZD, maybe pound USD or JPY, or sometimes Euro NZD.
Wednesday, yeah.
If you don't mind asking, what are your 4, 5, 6, basic requirements?
You say that again?
On your trading plan, what is your 4 or 5? It has to have diversion. It has to have a W and the T. What are your basics?
Okay. High of the day, low of the day, high of the trading session, low of the trading session, how price behaves in that timing window. And I have to see a stop hunt or a false move. And after that, I need to see how price behaves around either area before even making a decision. I don't even get into a trade unless the market actually moves to a high or a low. I don't trade in the
Cool.
middle.
Yep.
Yep.
Thank you. That makes total sense. Yep.
Nice.
So there's no type 3s for you. You strictly go type 1 basically.
Well, type 3 can be technically a type 3 can hit the top or the bottom after it hits a stop. And that is still considered the low of the particular session as long as the stops are hit. But when the trades I focus on are on the outside because it has the lowest risk, the highest reward. And those are the ones that go outside of the range, 15, 25 pips or whatever. Does what it does, hits a high, comes back, maybe works the high again, gives a sell setup, high, then boom, I'm in it.
So what have you found as far as like per week? What's the average number of trades that you would normally take on average?
Me?
Yeah, yeah.
Um, Last week was slow. I took two, maybe four, but ideally, I see my ideal setups at least 3 times a week. But if I wanted to trade, just like to get into a trade, just because I see the setup and it is a good setup, I see trades all the time.
Yeah.
But I literally can get out of all the pairs that I watch, I can easily get at least, minimum 3 trades a week. Three really good trades. That's what I mean.
Really good
Good
trade.
trades that I'm confident in and put big size on. I can put standard lots on and I don't have to worry, you know.
Being that particular, what kind of win rate have you found so far?
Percentage wise, really, I really don't know, but a lot better than what I was doing. I was trading more before, and since I'm trading less, I'm getting more pips and making more money and with a lot less risk and less stress. And I'm more patient. I mean, I'll literally wait until Wednesday, sometimes Thursday, but it depends how the market's trading. And I'm willing to sit and wait for my setups to come because they do come.
So are you telling me you get paid to wait?
Yeah, you do too.
You get paid to wait. It's a game of patience.
I guess I need to find a hobby or an Xbox.
That's what I'm telling you, man. Don't like the Xbox came in huge, bro. It came in huge for me. It kept me so distracted. Especially if you play some online Call of Duty or something like that where you just can't stop playing or you die. You definitely got to do the whole session. That's like at least 20, 30 minutes right there. That's 2 candles, you know? So definitely, it definitely helps, man. Something to distract you. So you can just let it do its thing and let it do what it needs to do. You become essentially like your own worst enemy, man. Literally. You just become your own worst enemy. And it sucks. There's no reason for you to go through all that, all the work, all the studying, all that stuff, and then you literally can't be patient enough for your setup to like play out of stuff. It just doesn't make sense. It really doesn't. But all right, so we haven't done Euro NZD in I think forever. But let's go back to let's try to go back to somewhere. '19. Number here.
Hey, just quick question for traveling wise. Have you just use a regular laptop and have no issues?
Yeah, I mean, yeah, that's all.
Because I have
I have
iPads. Yeah, I have iPads. It's just it's hard to like mark up the charts and stuff and when you're traveling and trying to do back testing with it.
Right. Yeah, I mean, just the regular laptop. I mean,
Yeah,
I
nothing fancy.
you at least want something that's got like a decent processor and stuff like that. Definitely want.
Yeah,
Yeah, but I mean, as long as you got internet connection,
yeah,
you can
right.
pretty much trade. I know for me, I do everything off my phone. So like I use the charting on TradingView on the computer to view the charts, but like everything that I do is executed on like a phone.
Yeah, yep.
Trader 5 or whatnot. So yeah, for
Yeah.
me, that's what I do.
I just realized that you could do playback on your phone too. I never knew that with the TradingView. I must have screwed up the menu before because my playback was never on my phone before. And then this past weekend, I was screwing around looking at some charts, and I was like, oh shit, I can
So can you replay it on the phone?
I don't know how. Yeah, before I could never replay on the phone before, and now that option is there. I don't know if they just added it to the app, but it is there. Yeah.
I thought for sure that you know, that the phone was essentially too small to you know, to do it in. You know what
Right.
I mean?
Yeah. Yeah.
Yeah, I thought it was kind of just small to do it, but I mean, I guess if you can see it, I mean, why not? Yeah, that'd be pretty cool.
Yeah, I was just using it to kill time. I don't know, waiting for something. My wife had a pedicure or something with, and I was like, oh, let me see if I can play. And I was like, holy shit, I can play back on my phone.
Yeah, I mean, I do know that there is a third-party app that I found that you can actually replay bars in. But I mean, I haven't really used it too much because you know the screen size on a phone is so small. You know that for me, it's kind of like you know, kind of I want to have like a full, like a bigger screen. You know what I mean?
Yep.
So
Yep.
to me, you know, it became kind of bothersome or whatnot to, you know, try to use it on such a small screen. I think if you have an iPad, that's definitely better. Um, you know, I think you can get a hell of probably a lot more done um, on a computer, obviously, because you know the I don't know, I just feel more comfortable with it. I think an iPad though, if you're so you can trade on an iPad, I think that would be great because of the you know, MetaTrader 4 and 5, you can download it on the app on the iPad, and that's actually a really good application on the iPad. You know, so that's
Yep.
definitely, you know, probably something that you could do on the iPad itself for sure. So, but let's get into this here. This is Euro NZD. So previous week we had market maker cycle, right? Went down, reversed, and then it looks like we had a trending cycle the previous week. So previous week trending cycle followed by a market maker cycle. So let's see what we got here. Good information to take effect right away is obviously where this highest of the previous week, because it looked like that's going to be an important section here to look at. Possibly if this, you know, a huge M or something like that, you know. Um, but let's put this on. Let's see what's going on here. Let's put through this session here. All right, so Sunday, Monday. So let's see what comes about on Sunday, Monday. So 55 pip range or Asian range. It's coming out of the middle of the range. So nothing really is going to. There's no setup in this unless it, you know, goes to the bottom or to the top first. So it's got to go bottom or top first before anything. If it doesn't do that, there's right there. There's the. Do you see this right here? That pin bar right there is the behavior. So look at this right here. That right there. Do you see that? Look at every time they go down. So this area here, this block, is where they're trying to trap people to sell. Okay? You can literally just tell by the behavior that's happening here. So this essentially, depending on how far you are from that high, you're looking at, I mean, 57 pip, 55 pip range. Can you get 30 pips out of it if you were to take a short buy here to the high? You're not expecting anything else other than that, unless it breaks this stuff here. But does everybody else see that?
Yeah.
So the question becomes, is this, going to be in play because of the behaviors here that you see, the 200s right here, probably going to hold it. I think that if you look at it though, in the bigger picture of things, that high that was all the way up here is just setting up for a bigger move to go down probably. Unless that high is taken out, which I don't think that would be a high that would be taken out. But you have to think about, okay, what's the trade setup, if any, to go here like this. So this pullback is right here in the pullback. You have an 11 pip stop loss, let's say 12, to get not even to the top, to this yellow line here, which was the previous day's high. It's 35 pips. That's over a 2-to-1 risk reward ratio. And all you're saying is that this is the first leg, move sideways, you can play it one more time, and then they go. Does that make sense?
Yes.
Does anybody else have any thoughts to that?
That makes pretty good sense to me.
No.
Only thing I would be concerned with is that bunched up consolidation in the middle like that. Setup wise, it looks good. It's hitting the stops. Obviously, they're trying to give a sell signal at the low of the range to trap people short. So that's behavior that I would look for. I just don't like the EMAs going through price like that.
That's true. That's the only thing, right? So if you take this trade and then you basically notice where price either hits here and starts to like feel like it's almost like a running into a brick wall, that would be your behavioral clue to, all right, well, maybe this trade is not going to go anywhere. It's just going to continue to consolidate. So then you have to make a decision, is it worth the risk of staying in the trade or just breaking in even on it? You know what I mean? All right, so let's see what happens. There's your pull right there. And so really you can see like within that initial range of 55 pips, it really didn't, it's not producing anything. It's not moving anything. You see that? It's just mainly moving straight sideways. So now you got the two lines here from the high and the low of Sunday, Monday. This is already looking like almost very accumulative type of cycle. Let's see what happens on.
So are they building out level one? Is this level one basically that they're building out?
Potentially, yes. If you're calling this a peak formation high up here, then yes. And this would be like we'd be talking like on a 1 hour time frame, essentially, you know, not on a 15. All right, so first thing is price is moving straight through the EMAs. And now you're starting to get like the 200 involved, where on the previous day before it was not involved at all. It's just the 50 like you're going to see. But now we're talking about the 200 and the 50 now both going straight through price. You see that? So the likelihood is that these EMAs are essentially going to prevent price from moving up, essentially. So let's see what setups. So same thing, 56 week range. All right, so here you get a star pattern. See that? So you get a star pattern here, right at the 50 and also the middle of the range. So ideally, this could be an interesting setup for a sell. What does everybody else think about that?
I would like that. Only thing that would keep me from that trade, I wouldn't take it, but is that that small doji, if that pin was more prominent, like they were actually hitting the stops from the shorts, then I would probably take the trade. But since it's so small, I'm not.
Like this one here?
Nope. Up higher.
Or this one?
Yeah, that one. If that pin going up was like really prominent, like hitting the stops from the previous. Yep.
So not very convincing, essentially.
No, for me, no. I mean, it might be a good trade to hit the bottom, but just I've got to see pins. I've got to see a false move. I have to see something.
Yeah. And so also is you're looking at 17 pip, stop loss. And I mean, to get to where price was, it's only 22. So a risk to reward ratio of 1 to 1, not really worth the squeeze there on that one either. Let's keep it going here. So you see how it's moving straight sideways now. 1, 2, 3, 4, 5, 6 candles straight sideways. So this is probably going to continue doing this, and you'll probably have a move in the U.S. session, is what I would anticipate. So what I like to see a lot of times is when you have sideways movement like this, and it's basically the entire London session, it's a way for them to set up the New York session for the actual move. So let's see what happens here. Yeah, so you can see they're not doing anything. They're not moving past the middle of the range, and they're just collecting as many contracts as possible. That's probably the move right here. This candle's already broken outside of that structure. So it's basically like this. They're coming down, moving sideways, and then they finally go. They go very subtle on this one, looks like. They just keep hitting the middle there with the 50. See that? This is from a bigger picture there. So 1015, get a railroad track that's coming to the 800. How many pips are you away? 36 pips away from the 50. Would that be a good reversal trade at all? What do you guys think?
I would pass on it.
Yeah. Right now, you only got two things. You got a railroad track and that it's coming to the 800. That's it. You don't have anything else on the TDI yet. And ideally, based on the structure of how price is, you'd be way more interested in taking sells, not buys. If you take buys in this situation, it's got to be a very short-lived buy to essentially the 50 or something like that. Let's see what happens. Now you can see it goes right to the 50 and then just smooth sideways. Shit. So this candle here, this is news. Right at 8 o'clock. That's why I moved down like that. And that's 166 pip move. So
Now,
I'll tell you, you're not trading this for today, for this day.
no, I was going to say that since that move, now you're looking for sells, maybe a bounce off the 50 or a fake move up to continue to go down.
That
Maybe.
pump needs to consolidate that because you're still like 95 pips away from the 50.
Oh, I didn't know it was that big. Okay.
Yeah, it's 166 pip Asian range.
Ah.
So, yeah, you definitely need a big candle to come back to think about taking one of those. Yeah, there's nothing there right there. We're at 3 now. So clearly, what are we looking for ideally? Because of the behavior that we're having so far. You say you'd be looking for sells. You guys can still hear me, yeah?
Yes, yeah. I'm just not answering because I don't know, Denmark. So.
Yeah.
I would say looking for sales if I was interested in that. Just that behavior. I'm just not.
Turned
If I
off,
want,
right?
if I wanted to get into a trade just to be trading, then maybe. But just none of my setups that I like is even close.
Yeah.
So what do you see? What do you expect?
I would be, if I'm expecting anything, I'm looking for sales because we're
Okay.
in a trending cycle.
Yeah.
You know, we're in a trending cycle, so I'd be looking for sales. I wouldn't be looking for buys. I mean, the only day that's even remotely that that you would think of buys would be like on a Friday because they would be setting up for like the next week or something like that.
Okay.
It would have to be like a really damn good trade. So, but other than that, it'd be well, you're below previous week's low. You're clearly in a trend. So there's no other reason why you would not want to get um, be looking for sales. This Asian range is a lot better for a lot more kids. Okay. So here you have 1, 2, and 3. So you have 3 hits to that same high, to that same level. And then you have this big candle pushing away from it. You see that? You got 1 leg, 2 legs, 3 legs, all stopping at the same level. And then 1 big candle moving down. Question is, if you get any kind of a pullback, then you could potentially use that to enter the trade or to enter a trade on a sell, on like a type 2 sell. Now, for me, I would want the pullback to be somewhere up here. So like short, somewhere in this range here. And to 2 to 1, you're looking at somewhere like this to the low of yesterday, the previous day. Does that make sense? It has to come back because this
Yep.
trend,
Yeah. Otherwise, it's too big. Yeah.
otherwise it's too big. Yeah. So, let's see. So there's your pullback from over there. It actually went higher than that, went like all the way up to here. So now you're almost at a 2.5. You're at a 2.5 to 1 risk reward ratio on that.
When you start out with things like that, if you see that it could go longer or more, but when you start off, I think I'm just going to do it 2 to 1 and not, if it's bigger than that, I'm just going to let it, I'm not going to go for that. You understand what I'm saying?
Yeah, well, I think start out with 2 to 1, right? Because the reason you do 2 to 1 risk to reward ratio is because if you take 5 trades and you make sure that all of them are 2 to 1, even if you lose 3 trades and you only win 2, you're still positive.
Yeah.
You know what I mean? So that's why 2 to 1 is hugely important because of that reason. And if you get anything above that, great. But the main goal really is 2 to 1, 2 to 1, 2 to 1, 2 to 1. So let's see where this goes to.
And New York was a continuation if you got kind of freaked out in London, if you were like,
Yeah, it was. You almost didn't have like a really good setup though, because I mean, unless you're looking at it at the very beginning here, you know, if you're looking at it down here, you're already like at at that time you were at the low, and you were, you know, kind of pinning to that previous low also. So when it made, you know, very much good sense to take a continuation trade there. But if you were on here earlier like this here, that would have been good. But that mean that one went like 73, call it 74, 70 pips even with the spread. So that 44 pip trade turn, you know, could turn to 70. So that was a good one there. Let's see. All right, so we got Friday now. Now, kind of interesting thing are these dips that I see a lot here. So like this dip here, like that, almost kind of tends me to believe that that's almost like the bottom or something. But now we're trading above the 50. And we still have the big ones, the 200 and 800 above us. So the bigger trend on the bigger picture on the 1 hour and the 4 hour is still a downtrend. Okay. We're also kind of trading in the middle here on the TDI. All right, so if you look at this, behavior here, this, right there. That's the first clue. Second clue is this right here. The railroad track right at the 50. So think about what's happening here is you have this spike here, and then you have this railroad track that comes 3 candles later. Now this particular one candle here, this blue candle, pretty much takes out the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, all these candles here. This entire work of body gets taken out by one candle. It's like 3 hours, 4 hours of trading get taken out in one candle. That's the behavior telling you that they're no longer interested in this area. You get what I'm saying? They're no longer interested in this area here. So it's a good potential for type 3, essentially. And looks like you almost get across here, but on the 5th, right on the 50 here, on this TDI. So how big is that candle? That is the question. All right, so 15 pips. So let's see. You're looking at. So you would need a pullback. So here's a setup here. You still get a 2-to-1 risk reward ratio. If you get a pullback anywhere from here or more, obviously be better. But 2-to-1, just to take it to the 200, because that's all that you can expect right now because of the bigger picture, the bigger structure on the 1 hour and 4 hour, which is telling you that it's in a downtrend. Follow me so far?
Yep. All makes sense.
Yes, yeah.
There's your pullback, and like there's your pullback there on that candle. So look at what's happening here after they made this move. They're at the 200 here, and all they're doing is same thing, moving sideways here. So if this high, this candle isn't broken, this is the high of the day. And so this happens like ideally before 10 a.m. You could have a trade back down, like a reversal, like a New York reversal trade, basically. But that high can't be broken because it's already been set by them. So this high can't be broken. It's already been set by them. No. So do you see what's happening here? It went down, pinned to the 50, went back up. There's your pull away candle right there. You see that? Think about that candle basically takes out all of this work. So how big is that candle? I don't think it looks too big. So 14 pips. And where would you even take this to? To get a 2-to-1, you would need down here, at least here. I don't know if that's really doable or not because you're in the US session. Ideally, it'd be better if you get a pullback on the next candle so you can have a higher entry here, like that. And that way you can kind of get to the middle of the range. That's something that's probably doable. But this one's probably going to be very hard to, I can't see this one going all the way down and like that. Let's see what happens. But 2-to-1 is like right here, basically. So also, if you look at the TDI, you have divergence. Merge that. Yeah, so you see what I'm talking about? They went right to the middle of the range and then reversed. You see? So it's more like a 1.5. More like 1.5. So So let's try. So you basically had, let's see, 1, 2, 3, 4 trades during that week on that one pair. And so to be fair, like I would say 3, because this one was really a trade. This this type 3 going up might not have been the best perfect scenario, but the other 3 are pretty good and clear scenarios. So 3 trades, 3 really good trades on the 1 week. So let's see. What does that look like? What do you think about that one? That's what it looks like, middle of the range. 12 pip. Where can you even think about taking that to? The only structure you have is these highs here. I don't think that'd be really worth it though. 22, yeah, so it's only a 1-to-1 or less risk reward ratio, so not worth the take there. That right there, I'm more interested in this stuff right here. So this right here is your behavior. See that? And then now you get start to get like almost like a cord of wood type of vibe right here. This, if you switch over to a line chart, should be an M. Does anybody see a potential trade there at all? To go short?
I see one. I mean, as far as the behavior, that pin, it hit the previous day's high. So obviously there were stop orders there. So possible.
So this. That pullback there would be a good entry too. Because you had the push down and then you had the pullback. So that would be like a question is where would you take it to? And would it make sense if you were to take the pullback to any point? You have to go, okay. Basically the middle of the range is where you'd have to go to get a 2-to-1. You're only risking 20, which is not bad. So check it. We got two. All right, so Tuesday. Now we're trading above the high of Sunday, Monday already before we even start the London session on Tuesday. So I'm thinking that this right here could be the bottom. We could be on our way up because we've already cleared essentially this section that's going to work since Wednesday of the previous week. So it's had 1, 2, 3, 4 days to collect contracts here. You see that? Had all that time to collect contracts. So me personally, I'd probably be looking for buys during this week here. There's your behavior, by the way, also right here. You see that? That's just like a clear precedence of a high, let's say high of the day, HOD. Right there, probably. What does that look like? If you think about it, if this is the high of the day, right, the HOD of what you think it is there so far, see what happened, it's worked its way back down.
Little continuation.
Right, right. I'm very interested in a potential continuation trade here. You already have, I mean, the 50s is a really good anchor, essentially, for that. You already have the first evidence of behavior right there to that pin bar. So I'm kind of interested to see what happens the next 2 or 3 candles, see if that's, that if this low here essentially is what they're trying to protect or don't want to go below that essentially. Yeah. Yeah, so this right here, look at what I'm talking about. Is it 9:45? This is like the perfect timing for a continuation trade because it's right 15 minutes into the U.S. stock opens and stuff like that. So, yeah. If you have a pullback, it'd even be better. But I mean, this candle is 15 pips. So if you were to get, let's say, if you don't get a pullback, you got a 15 pip, and you need, I mean, shit, just right there, you'd be fine. So something like that would be fine. If you get a pullback, it'd be even better, because then you can adjust. Obviously, you can have your stop losses way smaller. So it just depends on whether you have a a pullback or not. But yeah, you had a big pullback. So, I mean, take your pick. Anywhere in here would be your entry. And now you turn a 2 to 1 into almost a 3 to 1 risk reward ratio. And if you really wanted to, you could, now make it even smaller, 2 to 1 right there, which is way more easily manageable than the other one. But I mean, you have potential here for a really good trade setup within this range here. There you go. So you got a straight. If you want just 2 to 1, you got your take profit hit. This is with the spread probably an even 28 pips or so. So not too bad on that. So Wednesday. Remember, I'm still looking for buys. I'm still looking for buys. Right? We're still trading above the structure here, this previous structure where they spent all that time collecting. So I'm still looking for buys. You can see during the Asian range, the TDI already hit the bottom. Yeah, very bottom down the TDI. So that's a good thing. So let's see what we're gonna get in here. That's a W. See that?
Yeah.
There's your stop hunt here. You see how the next candle is. This is basically like a star pattern with an extra doji in the middle. But look at essentially this. This tells you the story here. You're going to see this again when you have one big candle, a big pin, and then 2 doji candles next to them, and literally look at the actual bodies all end in the same. You see that? This is the entire area where they worked right there. That's the behavior that you're looking for. Does that make sense?
Yeah, and they gave a sell setup at the low of the range. So when people look at that market, all they see is just sell, and it's just they're trying to sell the sell.
Trying to sell the sell. All right, so again, 15 pip, and I mean to get it 2 to 1, it's to the top of the range, but ideally, I mean, it basically would be the 800 EMA, because that's right there for you to use. So I mean, anything that you get past the top of the range here is a gift. So if they make it to the 800, great. If they make it to like this, the previous day's high, great. You know, but let's see. This goes. So we're gonna stop at the 50. Okay. That's probably a higher thing. No, shit. We're gonna go all the way through. Yeah. That's probably what it is. It's a 95 pip range now in London. Probably the same thing we saw in that previous week, where you had that 100, was it 160 something, you know, something ridiculous Asian range. So you're probably going to get the same thing where you might not get a setup because of that, unless it does move down and maybe hit the 50 or so. And, you know, you can kind of get almost like a continuation trade, really. But let's see. That almost looks like a second leg here on a New York reversal. But let's see. Higher. Where's that push going over there? I'll go back to 50 maybe. Go back down, set it up for the rest of the. So this brings up a good example of like there was no trade setup, right? Although the pair itself moved 161 pips. Now, when you see that as a retail trader, like how many of you would say like, holy crap, like I missed 161 pip trade, or I missed 161 pip move? My question back to you would be, where's the setup if you missed the trade?
Yeah, there was no setup unless you're trading outside of the boxes, but
Right.
no setup.
Exactly. Exactly. All right, so this is Friday. 88 pip range on Friday, so fuck, same thing. There's behavior right here. 1, 2, 3, 4, 5, all pinning to their previous week's high. There's a push candle right there. How many are you thinking continuation trade? Is anybody thinking that? It is a Friday, right?
You would still think about that, even how it was acting before in London, pinning all the times to the previous week high? You'd still be considering looking for that?
because of where it went to, you know, so like it went all the way up here. That's essentially the structure that you have to work with, right? So if they want to go back up there, they've already been there once, right? So
Gotcha. And you could still get 2 to 1 almost, it looks like. Yeah, at least 2 to 1. Yeah.
2 to 1 still. You know what I mean?
Yeah.
If it makes it all the way up here, it's really like right there, 27 pips even. You know, so that's doable for a continuation trade like that. You're in that kind of range here of going back up a lot. And talk about like footing bullshit. I think it literally went to that freaking line there. You see that? Sheesh.
Was that right to the candle bodies of the
That's what I was
London top there? Was that what that was?
The
It looks like it.
7 pips and then spiked it and then dropped. What this looks like is really, it looks like a multi-session end.
Yeah.
It looks like on a Friday. But you did get a 2 to 1 win, so that's already all after, so there we go. Good stuff. So is that helpful?
Yes, thank you, Jane.
Yeah, always. This is always.
Yes, absolutely.
Good. Any questions?
Yeah, you pointing out you always pointing out the particular action to look for is very helpful.
Yeah. That took a long time to figure out, so write down, rewatch the video and write all that crap down because it only comes out sometimes.
And I also, what Troy said about the back testing, I'm there where I still have to figure out what it is that I'm actually looking for. So I'm glad to hear that somebody else also experienced it like that.
Yeah.
And I know as time goes on, I'll realize what it is that I'm looking for. So apart from just, the things that you've taught us, but what do I actually need to assist my trading?
Right. You got it. Cool. You guys have anything else for me?
I just want to ask if the setup is on the edge of the London session, do you take it or do you wait sort of for it to be confirmed in the New York session?
What do you mean set up in the London session? Which one?
Right on the last the last bar that forms in the London session. If that sort of confirms your setup for the London session, do you then just ignore it?
I think that, are you talking about like, let's say a type 1 or something like that, or?
I'm not talking about a specific, I don't have a specific, but sometimes you see that where your cursor is at the moment, that's that's right, the last bar of the London session. Sometimes you'll see something there, and then I'm not sure if you should take it or ignore, wait for the New York session to sort of almost get a confirmation of what you're expecting.
Yeah, I think that really depends on a couple things. What is your risk to reward ratio? And are you risking, because if you're thinking about taking, or if it takes that long, for price to get, where you want it to be, you're
Yeah.
probably going to be pretty far away from the actual, let's say,
I understand what you're saying. Yeah.
you know what I mean? So
Yeah.
the risk, when you map it out, the risk to reward ratio, you might be risking too much, more than like 15, 20 pips.
Yeah.
So at that point, that kind of automatically takes you out of the running.
Yeah.
You know what I mean?
Yeah.
So yeah, I mean, if it's at the very end of that box, you're probably better waiting, for a setup to appear in the New York session.
Okay. Thank you.
But yeah, normally I wouldn't tell you to take trades that late, because your stop loss is going to be way too out.
Okay.
So.
Hey, Mark, I got a quick question for you.
Yeah.
I'm always looking for the double tops or the multi-session M's, but when you are thinking that your price is going to go up and hit an EMA or a previous week's high or something, would you have a sell limit sitting there, and so you can get a double whammy? You go up there and you get it, the sell limit kicks in right away, and then you get it coming down for another 20 quick 20 pips. What are your thoughts on that? Or am I overcomplicating it? And is it harder to do on a 15-minute time frame because the candles move a little quicker? So I'm having problems with that.
I think that for you to use, like, let's say the the sell limits, buy limits, buy stops, sell stops, all that stuff. At least for me, I find to use those helpful, like on type 3 setups, and it would be basically, I would use those typically on setups where I know that I'm not going to be awake or present.
Well, you're not going to be what?
When I'm not going to be awake or presently watching.
Oh, yeah.
You know what I mean? But like, let's say I'm walking, let's say it's like 1 o'clock in the morning or whatever, and I'm looking at the charts. I'm like, man, if I can just get a type 3 here that pins to the middle and then also to the 50, right? Price hasn't gotten there yet, but that would be like the ideal setup that I'd be looking for, right? So if I'm not going to be, let's say, up during that session, then I could put like a buy limit, order right there where I can get into the trade, still use same thing, 15 pip, stop loss, and still be able to get a 2-to-1 risk reward ratio and see if it hits. If I'm right, it'll go there, it'll hit it, and then do what it does.
Do you find it difficult on a 15-minute time frame adding those extra trades?
Adding the extra trades?
Well, see, you're going up, so you're sitting there. You're going to get your pips going up to the EMA, and once it hits the EMA, you're taking profit. But at the same time, your sell limit is kicking in, and when it comes back down, you catch another 20 pips.
So are you trying to do like a buy and a sell at the same time almost?
Kinda, almost.
I don't trade that way, so I wouldn't know.
Okay.
That's not what I do.
Well, I just didn't know
Yeah.
if that was something that was coming down the road or,
Yeah, that's not something that I trade with like that. So I can't recommend it because I haven't done it like that.
okay.
You know what I mean? I'm more into like, let's say if I was, the example I was given was like something like this one here. You know, if I'm expecting, let's say, I would want like a type 3 setup to bounce off of the 50 or the middle of the range, you can put, you know, let's say a buy limit order here, you know, and then measure out your 15 pips, put your stop loss here, and then measure out, you know, your 2 to 1. So it'd be 30, you know, my profit will be there, go to bed, you know, and then if price hits it, you see what I'm saying?
Yeah.
That's what I would do there.
Yeah.
Something like that.
And that's when you go to bed.
I'd be in bed while all this whole thing is happening.
Yeah, I get it. Thank you.
Yeah.
Yeah, but for that, you really have to know what you're expecting. So you have to.
Or you're kind of forecasting based on what you see.
Yeah.
You know what I mean?
Yeah. But I mean,
Yeah.
that's practice. You need.
Yeah, of course. Yeah,
Yeah.
definitely. It's definitely practice. Yes, absolutely. Absolutely. But once you do it enough, you kind of know. You have to do it also when you do that kind of stuff. I mean, you're going to do it on pairs that like you trade a lot. You know what I mean?
Yeah.
That you know very well, and you kind of expect what the behavior is. You just don't want to sit up, you know, to watch it the whole night or whatever.
Yeah.
So.
And have you ever sort of done an analysis of if it's better to set your take profit and leave the trade or manage the trade, which gives you a higher success rate?
I think that if you leave it at your take profit and take your take profit, I think it'll be way better for you than trying to manage it, because when you try to manage something, your emotions are going to come into play
Okay.
and you're going to be emotional about stuff and you're going to make emotional decisions.
Yeah.
And
I
sometimes
actually heard somebody that
don't play out of your favor.
I've heard of somebody who said he actually tested it. He sort of, and he's definitely better when he just leaves it. Just,
Yeah.
you know, set your take profit and you walk away, basically. So,
Right. Yes. Exactly. If you're up at that time, just happen to be up, you know, like, then, you know, you can manage it if you want to. And, you know, possibly once it hits, let's say, your 30 pips, you know, you could take your profit, your take profit off, but you have to move your stop loss into positive
profit, yeah.
into profit. And so the problem becomes, you know, when you do that is, okay, you take off your take profit and then you move your stop loss up to what, 25 pips, 10 pips. So essentially you're kind of almost like gambling at that point, to where like you're hoping that it goes higher for you to get more. You know what I mean? Instead of just taking your 30, call it a day. You don't have to look at charts anymore, and you could, you know, go about your day. So you have to really think about, okay, what is it? Why am I really trading? You know, am I trading to, you know, trading is supposed to be where you can take your profit, call it a day, and then have your time back.
Yeah.
At least that's why I'm doing it. You know what I mean? It's not for me to be sitting at the charts and you know, slaving away for
Get completely consumed by it. Yeah.
Yeah, be completely consumed by it, exactly.
Yeah.
And the majority of retail traders are consumed by it when they first start.
Yeah.
You know, so.
Yeah. Well, I can actually see it getting unhealthy. So.
It can. It absolutely can.
Yeah. So.
It absolutely can. So that's, you know, from what I've seen, you know, the last 3 or 4 years, I mean, it could definitely get crazy hectic. You can get really, really consumed by it if you let it.
Yeah,
And
yeah,
if I had to do it all over again, then I would probably not I would not trade. I would have not traded the London session, and I would have just stuck to the U.S. session and been able to get like a normal sleep schedule.
Yeah.
And I'm sure I shaved. I'm sure that I exhausted a couple of years of my life trading just London and having to switch my entire schedule around to where I'm going to sleep at 8 o'clock in the morning. You know what I mean?
Yeah. Yeah. No, that's yeah. Well,
So very, not the best and not the most ideal situation or whatnot, but
no, that's why I think if you say 2-1 and that's enough. You don't need to get more from it. You just once you have that, you're happy and you leave it.
right, exactly. So a couple thoughts real quick on GU. If I'm not mistaken, I believe this is probably going to be right here, peak formation high. So I'd probably be looking for sells. This has already gone up to what's what is the ADR? 111. So let's see. That's right at almost 300 pips. So it's already close to 3 times its own ADR. So I'd probably be looking for this area here not to be broken. So if this area keeps where it's at, I'd be looking for sells on pound AUD. I think what's it, pound JPY, same thing. Peak formation high here, and I'd be looking for sells. It's like almost looking for trades to bounce off of these EMAs. That'll do that extra confirmation right there that you'd want. But I'd probably be looking for sells also on pound JPY. And then the last one, I think was just Euro CAD. So on Euro CAD, I would ideally this little formation here, I believe this is going to go higher. And so what I'm looking for is a break past all this whole square here, call it. If you look at where price is right now, once you break out of that, you have nothing but open space to go up to. And you just had a big W here and then a straight move sideways. So I would be looking for more buys potentially and looking for this structure to be broken and then to go up higher because you have all this to work with. Just some thoughts. All right.
Thank you.
Yeah. All right, guys. You guys have a good night.
Thank you, Mark.
You too. Thank you.
Yep. See you Tuesday.